Welcome to the Rise Network podcast show, a podcast dedicated to help you reach your dream lifestyle through investing in real estate. We're going to be sitting down with new, intermediate, and experienced investors to talk all about real estate and how it has changed their lives. If you're looking to scale your portfolio or even just get into real estate investing, you're in the right place. Make sure to tune in. Happy Thursday, everyone. If you're listening to this on a Thursday, you're listening to the Rise Real Estate Investing Podcast with your host, Austin Ye and
Mayu. What's going on, everybody? Austin, what's new, man?
I want to point this towards you this time.
Me?
Sometimes I ramble. I always start off, switch things up.
Yeah.
What's new with you?
So we listed our property in Chesley, the flip, good profit margin expectations. Let's see what actually happens. But we listed it. We had a bunch of showings on day one. And then there was rat droppings in the house, bro. We fully gutted, renovated this house, and there was 2 rat droppings, one on the windowsill and one on the bed. And a realtor told our realtor that. And so we were like, fuck. So now we have to take it down, got to get pest control in there, figure out if there's actually rats or if someone's fucking with us here, right? But this was not a good start to our listing experience here. But, hopefully that thing gets sold and it gets done with. Looking at the renovation budgets on my 9plex, and man, numbers have started to get high. It's crazy. Just our hallway renovation is looking like it's going to be 20 grand. I'm like, shit, didn't see that coming. But I mean, it's part of the learning experience. But that's really all that's new on my end. The mortgage world it's surprising. I think things did cool down a little bit over the summer, but things are definitely picking up again. People are buying some crazy shit. A lot of people are looking at Sault Ste. Marie, man. I think it's an interesting market. The purchase price to rent ratios are really good. I have clients that are buying houses at $110,000, $120,000 for a house, and they're going to be renting it out for $1,600 to $1,800 and stuff like that. So it's definitely an interesting market. Piqued my interest, just sharing it with everyone on this podcast. Me and Austin have talked about this before, where literally it's not that hard to pump up an entire market. If 50 people decide to buy in a market together, you could completely significantly sway the buyer demand in that local market, right? It's pretty crazy, but pump and dump.
That's awesome, man. Yeah. I was taking a look at that market as well, Thunder Bay. The main issue I've heard there is that the reno cost, and I was speaking to someone who actually typically buys in Windsor and decided to buy a property in Thunder Bay because the cash flow was pretty decent.
Yeah.
Is that his reno cost was probably 40% higher than what he's used to paying.
Wow.
And so the appraisal values are usually the tough thing as well, right? So you're spending money on these reno costs, but are you able to really burr the money out? Because the cash flow is solid, but nothing changes from a reno perspective. So your appraisal just needs to justify it. So you need to find even better deals, which is definitely possible, given that I don't think much marketing material does go out there. It's relatively unscathed by most wholesalers. And so there is opportunity to probably find off-market deals there. So if you guys are looking at those markets, I would definitely suggest putting out your own mailers before we start doing it, which is probably going to be pretty soon.
I imagine the fees that you can get as well. When you're dealing with a lower price point as well, 100, let's just call it $150K a house. Even if you lock it up at 120, there's a cap on how big of a fee a wholesaler can really make, which I think might have impacted other wholesale or prevented other wholesalers from really considering it that strongly, right? Because your mailing costs and your flyer costs and your marketing is all relatively going to be the same anyways, right?
Exactly. Yeah. And then now you're adding in the element of taking photos of the place, walkthroughs, all of those are going to be pretty difficult. Most of your out of town investors are, when you're driving up to Thunder Bay, I guess you'll have to fly down there. Yeah, you're going to be flying down there. But you can't schedule, we can't schedule all the walkthroughs on one day because people are all over the place. It's whenever their schedule allows for it. It's not simply just a 2-3 hour drive down. So no, completely get it. And in terms of your flip, the rot droppings, does that make a significant difference given that it's is someone possibly put in a sight unseen sort of situation or not? Not really.
No, and it's interesting. This is why I always kind of say, use a local realtor to that area. There's huge, this is in Chesley, Ontario, right? So there's huge negative, a negative perception of people that try to induce a bidding war, right? So when I was talking to the realtor, I'm like, okay, so what do you think we list this at? What do you think we can get for it, right? So we're like, okay, we'll probably get 485 or something like that. He's like, you might be able to get a little bit north. And I was just the 5 or 10 grand isn't going to make or break it for me. It's more so just get out of it fast, right? And so I was just like, okay, so if we're targeting 485 or whatever we're targeting, What do you think we should list it at? I was expecting him to say like 449. Worst case, like if he's really trying to do a bidding war, like 399, right? But like 449 made a lot of sense. It means like, look, like a lot of realtors, they just won't fuck with the bidding war in Chesley. They're just like, forget it. Like they're just like really tired of that kind of stuff. And they just won't, like clients are really tired of it as well. So we ended up listing it for 484,999 or whatever, right? Like right at list price. And it's kind of one of those markets where things could very easily take like a little bit over a month to sell. Like in today's world, it's a little bit different, right? But it's not really one of those sight unseen, like crazy, like hectic kind of markets. It's more so a little bit more level. Like a lot of like sales prices are within like $5,000 range of whatever it was listed at, right? So you just got to know your local market. And yeah, there's only so many buyers. So we just didn't want to take the risk of like getting a bad rep for the property. So we were like, let's just take it down. Let's get a pest control in there to see if there's actually a rat problem. If there is, we'll address it. If not, then at least, someone's fucking with us, or it's just like a random like dropping or something like that. And then maybe
the other realtor just dropped it in there.
That's what I'm saying. No one else is buying this house. I'm just going to leave a little bit of poop on the fucking heart.
We're finally wrapping up our flip project. Actually,
this is done up,
man. So it's just full of delays. Next week we're having a stager go in there. We're paying about, I think it was like $5,000 or $6,000, which is actually pretty cheap.
That's a big house, isn't it?
It's a 2,500 square feet house. I was expecting 10 grand for staging cost, but yeah, I mean, pretty affordable. We're not doing everything from top to bottom, but pretty much the main rooms. And the stager pretty much said themselves that you definitely do need to stage this house because the space is too big that when people walk in, they're not going to know how to make it flow properly. So hopefully get a positive ROI on that. But nonetheless, we'll jump into the podcast today because I'm sure we can keep on going on and on with updates. In today's podcast episode, we have a very special guest today, Thomas Lorini. Thomas Lorini is an extremely experienced real estate investor. Pretty unique, actually. I think he's probably the first person we've ever interviewed from the States. So he's US based, lives in California, but he actually invests in Ontario. So he has multifamily buildings. He has Airbnb business model buildings. He has wholesaling. He has a ton of different businesses in Ontario. And on top of that, he does development projects in California as well. He actually got his real estate journey started off in Ontario. We talk about everything from long distance investing, opening up your mindset, scaling up. This is an episode you do not want to miss out. Very inspirational, so make sure to tune in. Hello, everyone. Today we are joined with our very special guest, and we've delayed having you on, but it's about time you're on the podcast. Mr. Thomas Lorini. Thomas, how's everything going, man?
Going well, guys. It's a pleasure to be here today.
Thomas is halfway across the country, I guess, not even our country, but yeah, he's in a much sunnier state right now. But Thomas, for anyone that doesn't know you, and myself and Austin have followed your journey, but for anyone else that hasn't, why don't you give everyone a quick introduction of yourself?
Sure, absolutely. So my name is Thomas Lorini, born and raised in Toronto. Background is mechanical engineering. I was in manufacturing for about 20 years, kind of grew up in it. My dad had a machine shop growing up. Purchased my first property in 2004. I was a property in Aurora. And at that time, I was single, pre-married, no kids. And if I house hacked it, put a tent in the basement, covered my mortgage, that sort of thing. And then from there, I always thought about, getting into more real estate, but, I didn't know anyone who was doing real estate. I didn't understand, the game, how to start, progressing. But what I did was I ended up joining REIN at that time in 2011. And from there, I was just that environment, being around people who were doing it, quickly built a team. Met a realtor who understood investment properties, who was investing himself. Found my lawyer who was investing himself, lenders and so forth. So I joined, I think it was in January, picked up my next property. A few months later, it was a duplex in Hamilton. So that's kind of like where my journey of investing started. That duplex really kicked my butt, honestly. I had all kinds of challenges with that first property, from getting taken for a ride by the contractors, getting, bad tenants initially because I was doing it all myself. But it was definitely a learning curve. So after about a year and a half, I said, okay, I figured this out. I think I want to continue, and slowly started adding to my portfolio. Next property was a single family, and then picked up a couple condos. And then the idea of moving to the States was always the background. So for those who don't know, my wife's originally from California. She moved to Canada when we got married. So the first 5 years of our marriage were in Toronto. And then the idea of moving there was always there. And we ended up transitioning. It was 2014. Sold the business, transitioned moved to California. But the whole thing was I built a pretty solid team. So definitely want to recommend you all, like, you definitely got to surround yourself around good people, and wherever you're starting, you can't do it all yourself. So start, building that solid powered team, which, I'm sure you guys have shared and many other people have shared, who those individuals are. It's 4 or 5 people with certain, skill set. And as long as they're investing, they understand the investing world, that's key. So I'm in California. What am I going to do now? I'm in a new environment. I have no credit, no history. I'm not in the system. So I realized I'm like, all right, it's going to take a while for me to really be able to start, purchasing and building over here. I didn't know anybody. So I said, well, why don't I just continue investing back in Ontario? And that's how things kind of organically grew, where I was forced to, I wanted to scale. I was in California and I realized, well, you know what, let me pick the phone and start making phone calls. Let me start connecting with different people and see if I can do it. And sure enough, I realized I could. So, it goes to show sometimes we are our worst enemies, where we put that limiting belief or, well, you know what, I'm in a different country. I'm like, how can I do this over the phone? I have to go visit the property, I have to see the property, I have to touch it, I'm like, all that stuff. Where the reality is you don't. So that's what I ended up doing. I started, purchasing more properties in Hamilton, and eventually got to the point, because I was a non-resident, I was not able to qualify for conventional financing. So I started partnering, which was actually a forced way of kind of scaling, because I started JVing with people. And that's what I ended up doing. I started doing some flips in Hamilton, started partnering with individuals, and portfolio started growing that way. Then it was about 2017 where I started seeing the market was exploding in Hamilton. The price points were getting crazy. So I said, I got to shift my focus and look at other markets. So I just kind of, naturally looked in other areas outside the GTA. I considered Barrie. I looked at London, Kitchener, and I don't know, for whatever reason, Windsor came on the radar. At that time, doesn't matter what website, what group, no one was talking about Windsor. But I just thought, I'm like, wait, is it possible to find $80,000 single family still? Like $130,000 for duplex. So I'm like, all right. So I started doing research. I picked up the phone. I started calling property managers, realtors, and started connecting with lenders in Windsor. And that's kind of how I just did it. And eventually I found a realtor who was a property manager, and I kept bugging him and I'm like looking for a deal. He said he had a client who owned like a 5-plex for like 30 years. I said, that's the one I wanted. So I ended up purchasing that through him off market. And that was kind of the start of building this portfolio of assets in Windsor. And then from there, things have just progressed. I've continued to invest in Windsor, in other areas of the GTA.
So obviously that was a lot of acquisitions that happened. Just to summarize, what is your property count right now in Canada? Because I also know you have holdings in the States or projects in the States. In Canada itself, right. How many units or properties?
In general, in terms of the unit count, it's around 70. I've recently sold some assets. I'm in the process of selling some more. It's an interesting time. For the longest time, I've always been a buyer. Never sold. And finally now I'm like, all right, I think it's time. And then you list one, like, wow, it's sold for that much. Okay, let me try another one. So I'm in the process of renovating a few more that I've held for a long time and selling them. But yeah, it's around 70 units right now. And, down here in California, for those of you who know, I'm a realtor. So I'm a licensed realtor in California. And I do some investing in California as well. I was investing in Ohio, North Carolina a few years ago. It was more buy and hold, and then ended up selling those assets since. And over here, my father-in-law is a builder. So right now we are in acquisition and development stage. And in the near future, start building some stuff built to keep. Apartments is our goal. So the goal is 1,000 units over the next couple of years to build and keep. Between California, we've got a nice piece of property in Tucson, Arizona, that we also are in development stage as well.
Wow, that's quite a few things going on all at the same time. I'm actually not even sure where to start. So if we start with the Ontario stuff that you got going on here, right? So we talked about power team members. You talked about how you started off in that property. I think you said out in Aurora, then you were doing Hamilton and then Windsor, and that was in 2017. You started in Windsor. What are you doing different today? Just partially because I know you guys are doing bigger buildings, right? And so like, how do you structure that growth? Because it is kind of a leap, right? You were doing, I think you ended off with, you did a 5-plex in Windsor in 2017, and then you went from there. But I'm sure like now I see what you guys are doing. Is it a leap, or was it kind of like organic small steps that you took to get to like?
Yeah, it's a great question. Like I see guys today, and like in the first year, they got 50 units and stuff, right? So it's really remarkable. For myself, was more a slower progression. So at first property, it was a duplex. Didn't buy my next one until about almost 2 years later. And then the next one, maybe another year and a half later. And then I was like, wow, 5 properties. I'm like, this is crazy. You know, at that time, the idea of carrying 5 mortgages and 5 properties, and I'm doing it out of California, long distance, not be able to, and I'm self-managing. That's another thing. I didn't even hire a property manager because I'm like, you know, I could do this. And sure enough, I'm like, you know, that's another whole other conversation where I'm a firm believer, like certain things, I don't think certain assets, you don't need a property manager. Doesn't make sense. Other ones definitely want to hand it off too. So the progression was, you know, it was slow initially. And then it got to a point, and then mostly buy and hold. So just buy and hold. And the idea of BRRRR wasn't even on my radar. It was like, all right, 20%, I gotta put 20% down, you know, fix the property up, and then just rent it out and just wait.
So you had a ton of equity built in these properties too.
Yeah. That's the plus side. You know, if you hold long enough now, like, you know, almost 10 years later, I'm like, wow. I'm like, all right, these are some nice nest egg. And that was the thing, like, you know, back when I joined Rain, it's like just even one property, the whole idea was just buy one asset, hold on to it. And in 30 years, it's paid off. You got this nest egg sitting there for retirement. You can pass it on to your kids. You know, you can pull out of it or whatever you need, retirement, that sort of thing. And sure enough, it's like, wow, I'm almost there. Some assets almost paid off. And it's like, all right, you know, the cash flow may not have been there, but now the equity is sitting there. So that's why I'm at the point now to kind of offload a few things and reposition. But in terms of where I'm at today, so I went through this phase of acquisition, just buy and hold 20% down. Then I started JVing. So with JVs, you know, it got a little easier in terms of what I can do. So like we started doing some flips, and that was easy. I just, you know, partner up with an individual who's local, contractor, a friend who wanted to kind of do it, put some money down. He put some money down, and he would be more of a boots in the ground type of thing. I would just kind of maybe help with some resources, you know, talk to Steve, talk to John, you know, contractors I know from the area, and you know, and maybe help to kind of tie in, help with the rentals, and then slowly from there start getting into, you know, other deals. So I would say about 2 years ago, you know, I started expanding into the US, and then I was like, all right, that's good. But at the same time, I'm like, yeah, I can only spread myself in so many directions, right? On top of it, I got 3 kids. So I got certain, you know, I got balance things. So for me, things just always kind of gravitated back to Ontario. I just had, number one, had a lot of assets, a lot of equity, a lot of contacts. You know, that's huge. Networking and contacts. I'm a big proponent for that, you know, constantly talking to people. Social media is great for that. Definitely need a balance there, you know, posting and sort of thing. But at the same time, there's a value in it. So the more I network, the more I can start talking to individuals. And then everyone's like, hey, I want to do something. All right. Well, then that's where I was like, all right, well, I can add certain value. I can maybe do negotiation, find the actual, you know, property. But then they would come in and be more like, again, boots in the ground, that sort of thing. So over the last year, you know, started partnering with individuals. This past year, we bought a 22 unit in Cambridge, which we're repositioning. The motel deal with Aaron, that came up in February. That one, I spied that. It was on the MLS forever. And I kept seeing it. And I'm familiar with Grand Bend. One of my best friends lives in Grand Bend. I'm like, why is this motel still there? I call up Aaron. I'm like, hey, go check this property out. I think there's an opportunity there. Sure enough, he goes there and he's like, yeah, I think this is a legitimate opportunity. And then sure enough, you know, we negotiate a VTB, you know, we bring it private first, and we're like, wow, this was like 100% deal, you know, through and through. We just brought in like maybe 20 grand each to do some renos, and then things just start, you know, growing from there. So that was a great deal. And then, yeah, other acquisitions of recently, you know, again, partner with people. Maybe it's kind of to segue from there. A lot of times people reach out to me and they're like, hey, you know, what do you recommend I do? I'm a newer investor. Where do I start? How do I do it? Or do I join a particular group? You know, they want to charge 30 grand, 20 grand. Like someone called me yesterday. You know, there's a group in Ontario and they want to charge 30 grand. Do you think that's a good idea? I mean, yeah, it could be a good idea. Like for myself, I got to surround myself from people who are doing what I want to do. If it costs money, well, that's part of your education. That's part of being, to learn and a faster pace than maybe just doing it on your own. At the same time, I threw out this example. 6 months ago, I connected with a friend of mine. He saw me on Facebook. I hadn't seen him about 10 years. He was like a work acquaintance. So, we kind of like, we'd go out for lunch when I was back in manufacturing. He's like, hey, I see you doing all this real estate stuff. I would love to do something. So, we basically started chatting over the phone. And I certainly learned that he never really invested much in real estate. I think he had his principal residency and maybe had one rental in the past. He sold it, but he wanted to really get into it. Didn't have a ton of money. So he was like, well, what could we do? So I started identifying different options. I'm like, well, if the lowest hanging fruit, the least amount of this, capital is wholesaling, and kind of showing the ropes of how to wholesale. And I was doing wholesaling, over the last year on my own. And he was like, yeah, I think I can do that. So I basically told him, Kijiji, mailers, I give him a list of different things he can do. And this individual, he went all out and he started doing it. And soon enough, he's bringing me these deals. What do you think of this? What do you think of that? I'm like, wow, this is great. So from there, we purchased an amazing eightplex just outside of Ottawa. Great deal. I mean, that deal alone, we actually got paid $60,000 by the sellers to close. That was just one of those rare situations, which probably would never happen again. But, it all just grew because of this individual listened, took some action, and, sure enough, things just started progressing from there. So that's one of the things I tell people. I'm like, you can join a group, network, and surround yourself from people who are doing what you want to do, and things will happen.
I think you're right that the networking part is a part that a lot of people don't have, right? I think if I look at myself before, I was I met all these different real estate investors from going out. It wasn't like I was surrounded by friends that even had 2 or 3 properties, right? I was that guy that had a couple properties, right? But to me, it was a lot, right? But then when you get into this community, you go, I've got nothing, right? I could do so much more, right? And so I think you're right. And I think some people just need their eyes open to that. But for sure, even from your perspective, leveling up does take a lot of either it's guts or it's your own capital, right? What do you think is vital for someone to level up, right? Because I think even if I look at my own portfolio, I've gone as high as 9plex, but now to me, the next step is go for that 10 to 15 unit, next challenge, right? But that's now something that either needs a lot of my own capital or a lot of private debt, or I don't really want to do joint ventures and stuff like that anymore, right? So what do you think is the main hurdle that stops people from leveling up? And how do they get past it? Is it a coaching program, or is it more so you really just need the balls? Is that what it is?
Yeah, I don't think it's rocket science, guys. I mean, if you're buying a triplex and you want to go buy a 20plex, it's not a huge step in the amount of work involved. Sometimes I find the smaller deals suck so much time and energy out of you. And it's at the end of it, it's not worth it. That's what I was doing in Cleveland. I was buying these single family houses, and yes, 1%, 1.5% rule and stuff. But I'm all this for $300 a month. I'm I don't know. And there's no appreciation on top of it. I'm just forget it. I'd rather just do one big deal a year than doing 50 small deals. And that's what I was getting more selective. So yeah, maybe some bulks, yes. But at the same time, it's just sitting back and say, okay, do I not understand the process? Okay, let me understand the process of acquiring an apartment building. And then you soon realize, okay, well, it's very similar to buying a small multi. Maybe it requires more capital. Maybe there's a few little different nuances, but then what's holding you back? Is it the capital? Well, then go find the capital. Is it the asset? Well, go look for the deal. I just assigned an apartment deal yesterday, and it was a sweet deal. I negotiated this deal through and through, put it out there, and everyone's well, I don't know. They were overthinking it. And I was I do the deal, but there's a considerable amount of improvements that need to be done. I'm not local, and I don't want to partner in this particular deal. So I said, the best scenario is for me to sign it. I think the individual who I signed it to, he's going to get a solid deal. The amount of, again, negotiation I did, I kind of laid this up. I got the price down the last, basically in the last inning to make it even sweeter. But the point is that what's holding you back? What's holding back? Identify that. I think just something in the mindset of apartments, it's kind of scary. It's just bigger numbers, extra zeros. And that kind of puts people a step back. Well, $5 million, $3 million, you know what I'm saying? So I think it's identifying, is it the capital? Is it the actual deal itself? And overcoming that. And just making some offers. Start with making some offers of bigger things. Most likely you may not get the deal, but just start by enabling those habits, just like building the muscle. And as you get accustomed putting deals out there for $2, $3, $4, $5 million, eventually something's going to happen, and then you're gonna get an accepted offer. If you could put condition, like the likelihood with apartments that make you have conditions, which is great. You don't have to go firm from day one. So now you've got conditions, you got time. So like that eightplex we purchased in Ottawa, I don't know where the money was going to come from. He brought this deal, made an offer, got accepted. All right, now we need about $200,000, right? I'm like, Nick, do you have $200,000? He goes, no. I'm like, all right, don't worry about it. So I just kind of like made a few phone calls within like a couple of days. One person was like, I got 160 grand. I'll partner in with you guys. Beautiful. So I didn't have to solve everything, every step initially, right? Just start, put the offer out there, get an offer accepted. Then the next step is look for the capital. Again, you want a JV, you don't want a JV, fine. But you need capital. Either yourself, either refi one of your own properties and use that equity. Is it borrow privately? However, just solve the problem, but don't have to solve it all initially at the same time. Just take it in bites.
Yep. Or you get stuck just waiting there trying to solve everything and you just don't take action, right? Yeah, that's perfectly fair.
Yeah, I totally agree with you on that end. So it seems like you're doing a lot of creative joint ventureships. May I kind of dive in and ask, like, how are you structuring these JVs? Because you are doing it with several partners and you are doing it with several markets while being long distance. Is it like different for each operator? Can you give us an idea?
Yeah, every deal has its own company. So we established our own company. The partnership, the splits are all, it's a JV agreement, partnership agreement in its own, I want to say LLC, but its own incorporation over there in Ontario. In the States, we set up LLCs, and it's just another type of entity, a holding company that determines the ownership. And then from there, everyone's got their own part. What do they do for the deal? So yeah, again, it's not rocket science. In terms of taxation, that sort of thing, like I filed taxes in both US and Canada because of my situation. But, if you're curious, talk to a CPA, talk to one who'll be able to help you understand, well, if I'm going to buy this property with Joe and that property with John, I'm like, okay, what do I need to know? Like, is there something that may have long-term implications, or is it just simply, well, it's a partnership? So just follow the stipulations of your JV contract, right? And then in JV, you can put whatever you want to put in there. Yes, there's a blanket template, but you can work and change it as you see fit. If it's a different split structure, if it's different responsibilities, if it's a different exit clause, all those things, you can customize it for that particular deal. But yeah, each one separate. Each asset's got its own bank account. Try to keep it as clean as possible. Everything kind of separate.
So Thomas, I guess that's kind of a good segue into my next question that I had for you. So you've got your hands in a good number of different businesses, right? Whether it's and you've got different partners as well, right? You got a good sized portfolio in Ontario, in California, different states, and so on. And you've done all these flips, and you've done the motel project, you've done multifamilies, and so multiple different businesses, right? Mm-hmm. So are you how do you structure your business, and how does someone grow on that perspective, right? Because it's not like, hey, I'm doing all I'm a realtor and I'm just selling 10 different properties. Right. Which are kind of the same business model. This is legitimately different business models, right? Yeah. So how do you structure that, and what type of partners do you need that basically enables you to do that, or systems?
Yeah, it's a great question. See, I didn't go in initially with a very focused kind of strategy. Like some people are just doing Airbnb and that's it. That's their game plan. That's great. Become an expert in that particular segment. I think me moving, it forced me to change a little bit. Maybe initially I was more buy and hold and I was doing that. And if I lived in Toronto, I probably would have continued just maybe picking up a property a year, one or two a year, and that's it. And that would have been my thing. But as you get experience, and because I was long distance, I had to try different things and partnership because I wasn't able to qualify for the mortgages, traditional mortgages. I said, well, you know what? I'll partner with people. And that kind of opened up my eyes to JVs. And, so far it's been great, just to kind of scale. But from there, I hear, oh, people are doing wholesaling. I'm like, well, you know what? I can't do wholesaling. I'm in California. I'm like, the market investing is Ontario. I'm not going to be able to have people call me or go visit properties. But I just gave it a shot, just kind of like as almost like a, just try and see if anything happens. And wholesaling has been this whole other arm of investing and a revenue stream for myself over the last year and a half. I think I probably wholesale about 5 or 6 million, maybe $6 million of assets over the last year and a half, totally like on the side and totally different than what most people are doing. I'm not doing mailers. I'm not doing door knocking. So people are like, how are you finding opportunities? Well, I'm finding definitely different than what most people are doing, but it's working, right? So again, why? It's like, well, I'm a realtor in California. Yes. But, I've been investing for so long. And as I try something, things just start happening. And you're like, well, let's give it a shot. Like I use the wholesaling as an example. It's not like it's sucking up a lot of my resources and time. Ultimately, the way I'm doing it, most times I partner with individuals and it's just been a great kind of situation. And it's been great. Amount of time and energy and the return on it is like tenfold of some other deals I'm working on. So yes, at this point, I'm still acquisition mode, growth mode. But as I slowly offload things, I may start tweaking, my focus, especially now locally. We're under contract. And actually today is going to be an important meeting to see if we get the financing. It's a $50 million deal we're working on right now over here locally. And if we get the proper financing, then this will be a 2-year project where we're going to be building it and selling type of thing. And that's where kind of like where I'm eventually going, focusing towards. Yes, I'll do the individual asset acquisitions. Yes, I'll do wholesaling, but new construction, land development. I've seen kind of like how my father-in-law has done in the development world. It's pretty fascinating, but highly risky, but the type of deals that he's been able to negotiate, it's amazing. I'll give you an example. So like how he's done deals, which, for me, it's been great to be exposed to that. He'll go to a landowner and say, listen, how much do you want for your 30 acres? And the guy's like, oh, I want $1 million. All right, great. I'll give you $1 million in 3 years from now. I'll actually give you $1.1 million in 3 years from now. But we'll open escrow, but we won't close until 3 years. I'll give you down payment and I'll release you money every month. And it's firm, it's non-refundable, but I get to do what I need to do. So the landowner is like, all right, it's a piece of land. Maybe he's a farmer. He continued using the land for what he does, but he's under contract to sell this in like 3 years to close. What that does is give the developer the time to spend his capital on the development of the property. So instead of spending $3 million to close, he's got his open escrow under contract for. Now he's going to do the work. He's going to spend maybe $100,000, $200,000, $300,000 on the development. If that's architectural, engineering, environmental, all these studies, gets all that done, pushes it through the city, goes through city council, gets all these different, comments, feedbacks, change orders, whatnot. But at the whole game plan is at the 3-year mark, now you got something that's been approved for like maybe 50 homes, maybe an apartment, whatever. And now you increase that value like tenfold. So A, you can sell it to a builder, or B, you can actually develop it and build it yourself. But that's just kind of like, that was like, when I saw that, I was like, that's pretty cool. It just kind of gave me the idea. I'm like, all right, so you don't have to necessarily close. The seller's happy. He's getting more than what he probably would get now. He's in no rush. And for you purchasing it, I'm like, you don't have to come up with all the capital. You have the time. You spend your money on the actual work. Is there a risk? Yes. All your money that you spend could potentially go down the drain if you can't close, if you can't get the right approval, if you can't hit the 3-year mark, it doesn't work, done. It may be like, it's not going to give you any more extensions. And then you're like, okay, I just spent a couple $100,000 down the drain. But the risk reward is huge.
Is he doing it as like an option to buy at the end of 3 years? Or are you saying it's like a...
No, you're actually under contract.
So he's got to close it either way, whether or not these drawings and city planning documents.
You got to close it, or what? Or your deposit's non-refundable. I'm like, well, he's releasing money every month anyways.
Yeah.
Right. So it's kind of like an option, but actually you're under contract. That's the thing. Like our contracts, everyone thinks 30 days, 60 days. Push some of those numbers out.
Yeah.
Like just think outside the box.
I'm seeing a lot of creative strategies and solutions you're having here with the motel that's been sitting there forever, VTB, Airbnb, it, right? Things that other people don't see. with this, I guess this kind of land development, if you may, like push the closing 3 years from now, give deposit, give monthly fixed payments, and then you're able to finance it by 3 years once it's all fixed and done up, right? So totally understand that. That's amazing. It seems like one thing that you really nailed down, and correct me if I'm wrong, is there's a book called Who, Not How, and you're working with operators, people who have very niche specialty in a specific area, and you're just bringing kind of the network. As you mentioned, networking is your niche, your specialty. You know the people with capital, you know the right partners, you know A, B, and C. So you're helping put the other people in place and working with operators to actually execute. Am I getting that correctly?
Yeah, absolutely. I don't want to be the smartest guy in the room. I don't pretend to know everything, but it's definitely important if you can bring different individuals who know more, who are specialized, like you mentioned, operators, and they do their thing. I'm like, wow, I will be able to like leverage their skill set, and be able to grow at a pace I would never have been able to, or do something I would never be able to. Like small examples, the Airbnb. I partnered with Aaron in the last year. I'm like, could I have done it myself? Yes. But by partnering with him, now we've been able to scale at such a pace that it's just way faster. And for myself, like to learn that and to be able to, be involved in that, it'll take up too much time and resource and energy. So yeah, it's definitely important to kind of like bring in not just your power team, the realtor and the lender, but also the network to be able to glean. Because you may have someone in your group who's doing new construction in Toronto. Well, I'm not doing that. You may not be doing that, but them doing that can open your eyes and say, hey, maybe there's an opportunity here. You have a deal in your lap. Like before I'd be like, same thing with wholesaling. I just kind of like, I can't do this and just kind of like brush it off my desk and look for another deal that I could do until I got to the point like, why can't I do it? Is it because I don't know the individual who's doing it? Maybe bring in people and you're like, wow, okay, I bring in so-and-so and all of a sudden this happened. So yeah, definitely want to leverage and bring in people like operators where everyone, ultimately it's great to be around a group and be able to win together. It's one thing when you're just a solo operator, solo investor, doing on your own, but it's kind of fun when you're with other people and you're kind of growing together and it's a win-win.
I think that's a natural evolution for investors from joint ventures, right? So I think as investors, like we go through this period of, okay, we're going to do a bunch of JVs because like that's our only way to grow, right? And then eventually we go, fuck it, we're not doing JVs anymore. We just get like annoyed and we're just like, we're not doing this anymore. And then we start doing things ourselves. And then time becomes like super valuable for a lot of us, right? Where it's like, well, there's only so many things that I as an individual could do on my own, right? And that's where you go back to the JV model, but it's not really a traditional capital investor, passive investor, whatever model. It's more so like we just need operators where we can like, I'm more than happy to pitch in capital. Like that's, and like my expertise or whatever, like that's fine, but I need someone that'll actually like go check up on the house and like do some stuff, right? So that makes a lot of sense, Thomas. Like I think it's a great business model. And
yeah, and think the deal doesn't have to always be 50-50. If someone is doing considerable amount more work than you, I'm fine taking 25, 30% a deal. Yeah. You're doing all the work, you putting money into the deal as well. I maybe found the deal, maybe I'll negotiate, put some money into it as well. But you know what? I'm fine. Because this idea of it's got to be 50-50 or I need to have controlling of the thing, I'm like, that's a limiting belief. But it's not going to be the last deal. There's going to be more deals out there. So I'm just all about win-win, grow faster pace, and things will scale. Everyone's happy. And that's a smaller piece of a bigger pie than having a bigger piece of a smaller pie.
What I find quite phenomenal is that despite you being hours away from the market that you primarily invest in, you still have those networking connections. For example, you hosted a networking event. We're just talking about this before we jumped online. 7-8 people were supposed to come out, like 50, 60, 70 people showed up, right? And that just goes to show the power of networking. So how do you continue with networking with people being so far away? Because I know with the pandemic going on, a lot of people miss that face-to-face interaction. Well, you yourself barely had that face-to-face interaction to begin with, right? Because you're so far away. So how did you go about networking at such a long distance and still building meaningful relationships?
Ultimately comes down to giving value. So people already know if someone's taking advantage of them, if they're wasting their time, if they're full of crap. What I tend to do is I utilize social media to A, show what I'm doing, B, show I'm a real person, B, build credibility. It's huge. And from that, people DM me all the time. I'll take the time and interact with them. I will take a call. Whereas other guys are like, oh, it's got to, set up a coaching call and it's got to, I got to charge for it, whatever, so much for an hour. For myself, because I'm in real estate 100%, an extra phone call here or there is fine. And I enjoy it. Number one, I get to learn with the individual. I get to pour in my experience, share my stories. And from there, the person feels like, wow, okay, this person actually gave me some time and value and so forth. So I think sharing social media, but actually the DMs, the one-on-one time, and even if it's like a 10-minute conversation, people really appreciate that. Like later today, I'm going to be going for lunch with Dinesh. Dinesh is someone that was at the meetup. I'd never met him in person until that meetup. He's visiting California because he's got his wife's family has some family here in California. So we're going to grab lunch today. But why? This all started like a year and a half ago, where he reached out to me asking some pointers about buying a duplex. I ended up helping him, put him in touch with some people, and he ended up buying a duplex in Hamilton. And then, and he's Airbnb, and now he's on to his next property and so forth. So he appreciated the help I did for him, and he remembered it. So and that's the whole thing, guys. You got to give back, and that's why I host, the REWA, the talks. It's not even like a real podcast. I just like interviewing people and just having them share their story, exposing them to the wider audience. They get, recognition. I'm just asking them questions like you guys are doing. They feel good. They appreciate that. And it's just a cycle of just good stuff. It's a fertile soil. And you get that. Ultimately, it takes time. It may take years, but you get that kind of quality name and credibility ultimately.
Yep. And for anyone that's wondering, that's all we're doing with the podcast, right? It's really just provide value to our listeners, provide value to our guests, right? And that's all we've been doing, I think, on social media as a whole, right? It's kind of like a values first approach. Like I've got realtors that I've recommended people to that I haven't done business with in months, but I know if at any point I decide to turn back the switch and go back into that market, hey, how's it going? Right. And hopefully they'd be willing to service me. Right. So that's awesome, Thomas. So I think generally at this point in the episode, we like to ask our guests kind of 3 questions about themselves, just to get a deeper understanding. Sure. So Thomas, where are we going to be seeing you 5 years from now? And I think that'd be an interesting answer because you've got all these different business models. I'm also how do you see the business side kind of growing and what's next or what's your goals? I know we talked about development too.
Yeah, that's a good question. I don't think I've really penciled it down. I've set goals more like medium term, short to medium term, 5 years is kind of like a long segue. I look back in the last 5 years and I'm blown away. I'm like, wow, a lot has gone on in the last 5 years. So who knows in the next 5 years what's going to happen? I do think ultimately I do got to slow down at some point. I do have a family, young kids. I need this kind of quality of time. They're at that point where they're growing up. I want to spend that time because soon enough they're going to move out. So I do have to get to a point where my time is more balanced. So what does that mean? Perhaps it's not as diversified as now. Perhaps it's selling a number of assets and utilizing capital for more passive investing. If it's lending, if it's, everyone's going the options route. I'm just thinking of that most likely in 5 years from now, I'm going to be, right now I'm 44. I'm going to be pushing 50 at that point. So I kind of consider that, all right, young family, I got to balance my time. So that's what I'm thinking. Will it happen? I don't know. I mentioned that goal of having 1,000 units, with my father-in-law in the next couple of years. I'm like, if that plays out, great. That's one thing. When you're I enjoy real estate, but it's one of those things that's like a disease. It's always on your mind, right? So definitely need to find some balance. So I think in the next 5 years, that's kind of where my head's going.
Comes like an addiction, right?
Yeah, a little bit.
It's literally real life Monopoly. You know how people play Monopoly and take it way too seriously,
and you can play it for hours. That's actually that's such a good analogy because you play it for an entire night and no one's tired. And
yeah, that's awesome, Thomas. So second question here is: if you won $10 million, you had 7 days to spend it, and you cannot spend it all on real estate, how would you spend it?
10 days?
7 days.
Sorry, 7 days, $10 million.
Yeah, wow. A lot of money.
It's a lot of money in a short period of time. Definitely travel. 2 years ago, I took my family, my parents to Italy. We did 10 a month, and it was amazing. Just the experience of being in another part of the world, and just the culture, and just being totally disconnected from any work investments, and just being able to just suck it all in. I think traveling would be huge. With $10 million, you can take it to the next level. Private jets, the top-notch hotels, and you can bring in a bunch more people. So maybe instead of me and my parents, maybe it's like 50 or 100 of my closest friends, and we just kind of like go all out. And just like a week of like all out intense kind of enjoyment, just experience different cities and just traveling, bouncing around, full catered. I'm like, this is just kind of top of my head, but that would be kind of a fun thing, right? Going with like a large group of people, multiple jets, and just kind of like experiencing just life. Ultimately, like, well, why do we do this? We got to think about that. Like, yes, it gets addictive. So the next deal, make money, but then money just sits there. Or it's reinvested. It's just something. But why do we do this? Right? Sometimes we get so caught up into it, and it's like 6 months, a year go by, and it's like, okay, hustle. I got money now. Now what? I'm not doing anything with for my life to really help myself or other people. So you got to really consider that. And so at some point, it's like, heck, I'm going to go spend some money with my family. Let's go enjoy it. Let's do something with this money. Or I'm going to give back. Let me help some other people and better their lives, just to give more value, just to do something with this capital. So it's not all about just hoarding it and just having extra zeros in your bank statement. That's not the game plan.
Very true. Very well put, man. So Thomas, if you were to have dinner with anyone dead or alive, who would you choose and why?
Ooh, someone. It's a good question. Donald Trump.
Okay.
Yeah. He's alive. And obviously, yeah, besides being the president, he's done some extraordinary things in real estate. I read some of his books. Maybe he's an interesting guy, just to kind of sit down with him, pick his brain, and kind of have him share one-on-one some stories, or maybe things he hasn't shared with the public about how he's done some deals. Because he's one of those people with creativity to the next level. He started with some money, but he's been able to do and just kind of transform New York, and how he's made tons of money, lost money, made money. That's interesting for me. It's one thing to grow constantly upwards, but it's another thing to meet someone who's made a lot of money, lost a lot of money, and made it up again, right? And hopefully none of us have to go through that. But someone who has, and to be able to grow far higher than the previous time, that's something.
Yeah, so I think a lot of people give criticism when people start with money and now they're like multimillionaires or billionaires, but you got to give them credit where credit's due. Like if you give most people $100, $200, $300,000, $500,000, they can't do anything with it, or they won't take it very far. So you got to give kudos to people who take whatever they have and are able to stretch it into millions, like 10x the money that they have, right? So totally understand that. That wraps up the end of our podcast, Thomas. Really appreciate you jumping on, man. You are a wealth of knowledge. And I think no matter what your experience level is, you bring it back to the basics, creativity and networking, right? That's what got you to where you are today, like being creative, networking, surrounding yourself with other investors, and continuously learning and giving back to the community. This is what this podcast is all about. I know that's what you're all about as well. So really appreciate that. If people want to reach out to you, connect with you, how can they do so?
Sure. Basically, you can reach me on Instagram, Thomas Lorini 1. That's my handle. I usually respond to DMs there. I'm also on Facebook and my own website, or, and my number is posted plenty of different places. So feel free, DM me, message me, and I'll get back to you. But thank you guys. This is awesome. I appreciate you.
Amazing, man. I thank you for jumping on and joining us. We're going to have another episode later in the future. There's just too much to unpack with you, given your wealth of experience. For those of you guys who enjoyed this podcast, like, subscribe, rate it, share it with a friend, do whatever you can to support it, because it helps bring great guests like Thomas out here. And until next time, everyone, invest smarter and live better.